Have you heard or seen all the crazy stock valuations around AI, artificial intelligence, chat GPT, all of these things? Are you starting to think the AI craze may be similar to the .com craze? I don't know about you, but I have certainly had those thoughts. But again, this is not my area of expertise. This is something Mr. Dan Bird has dug into, and he has a lot to share. So, Mr. Bird, I remember the .com craze because I made a lot of money and then lost a lot of money. So I do not remember it fondly, but it certainly was a time to learn.
Yeah, I'm going to share some visuals from an article that I read over the weekend, and I'll bring the article up too and show you something in particular that will remind you of that period.
Oh, great!
but it's pretty interesting actually. So this session probably won't be real long. We'll talk about this, and I'll just show you some comparisons, and then give my opinion about it as well. But let me share my newsletter first, real quick.
Please. This is something people have to get. They have to get this.
It's free. I don't share emails or anything like that. It's something I do for myself. Whether people read it or not, I'm still going to do it. It's fine. But just send me a note to breakpointtrading@gmail.com, and I'll send you last week's and add you to the list for this week. So let's take a look at a few charts here. We can talk about it as we go along. This is the number of companies citing AI on their earnings call.
Okay, makes sense.
Going back 10 years.
Oh, wow.
All right.
Yeah.
So you can see way back here in 2013. I'd like to know what those two companies were.
Wow, 2013. I have no idea. Yeah.
2013. And then it started ramping up 2017. And then you can see here in Q1 23.
Yeah, 30% spike roughly.
Right. Huge. So everyone's talking about it, whether they actually have AI or not. And you remember during the .com craze?
I do.
Companies just had to add .com to their name, and their stock would go up.
I remember vividly.
Right. So this is the .com craze. This was a special report on Time Magazine. So the first thing to watch for to see if it's over is if the mainstream media starts covering it on their
that's
covers.
Cool. Check for magazine covers. I like it.
Right. Which I am expecting that to happen anytime.
Oh, it's coming. It's gonna.
It hasn't already.
Yeah.
Right. So this was the September 27th issue, 1999. You see that the market still had a little room to run higher.
Yep.
But that's the first warning sign.
Okay. That's funny.
So this is the internet revolution. The S&P is in the black line. The earnings and profits are in the red line. This goes back to 1904. So you see the industrial revolution. So anytime there's a new technology or a new revolution,
right,
things really take off.
Okay.
So it took off. 1929 crash. Everything crashed. Great Depression. That's by the way a secular bear market. In that little blue box. And then the market took off. Then we had space exploration in the 60s. And we had another secular bear market. And then the market took off again, the computer revolution with PCs. Apple started it off, and then IBM entered. Then we had the internet revolution. And you can see here how earnings and profits started to skyrocket.
Right.
Then it reached here. This is the .com crash. Came right back down, and this is the next secular bear market. I'm glad that they drew this in for me on this chart. They don't call them secular bear markets, but that's what they are. If you look at my chart, they're in the same place basically. So secular bears typically last 12 years. So this is 2001 to 2013, right here. And then right now we're in the current secular bull market. So, and I suggest that this is going to continue because these typically last 18 to 20 years. So we've got roughly till sometime in 2030 for this one to run. Okay. So this AI craze, just like it did in the previous chart right here. I mean, this ran September of 1999, it really wasn't until 2000, beginning of 2001, that things started to really crash.
Right.
So this still ran for another 18 months, roughly.
Mm-hmm.
I think we've got more than that, and I'll talk about why in a second.
Okay.
So this is generative AI revolution right here, this red line. And the black one is the .com revolution.
Oh, wow. Look at that.
So it's kind of showing you a cumulative performance starting them both at the same spot and how they map with each other. And you can see that this is going to run up. It might come down a little bit, or at least it did in the .com, and then it just took off. And AI might do the same thing. Took off. So we're tracking along similar to the .com, but that shouldn't scare people yet. You just have to be aware of what happens. This is technology versus the S&P, the red line, and the gray one is the
oh, I remember that red drop. I remember.
Right, that's the spider. So here's 2001. Here's the .com bust right there.
Yep.
Right at the peak, and just fell off a cliff. All right, and we're not even back to that yet. So anyone that owned Cisco at this point,
still not back.
Still not back.
That's true.
All right, and the gray one is the S&P. So we still have room to run. Basically, is what this is telling you. The AI revolution is really just beginning.
It's really early.
ChatGPT's only been out for 6 months, 7 months. So we're still very early. So we still have a ways to go, which actually is a positive thing. So let me show the article that I got those from. This is one that if anyone's interested, you could just bring up Real Investment Advice. This is a free newsletter. I know you were asking on one of your calls, Lynn. You watch Lynn
Alden.
Lynn Alden, who's very good, by the way.
Yep.
And you're asking for other ones. This is a good one here. They do some technical analysis. This is something that I've shown. You can see all the three main sectors are way up here in the top.
Yep.
If I can make this bigger.
Oh, thank you.
All right. So I've talked about this. These are the three aggressive sectors. They're in the top up there. AI is artificial intelligence, the new .com. So these are the charts that I just showed you. Number of companies mentioning AI. Clear FOMO, chasing stocks closely associated with AI. And I think FOMO is going to spill over into the rest of the market. It's starting with AI, with NVIDIA, but it's going to spill over. Now this one's interesting. You probably like this one. Jim Cramer's Winners of the New World, year 2000.
Oh, I remember this. Yes.
Let's look at this. 724 Solutions. Then it was $240 after minus 99%.
Yeah.
Acquired by Austin Ventures. Ariba, 173 was acquired at 45. Digital Island, 57 was acquired at $3.40.
This is fun.
Exodus, $90, bankrupt, went to zero.
Oof.
InfoSpace, name changed. The only one that's still around is VeriSign. It was $258 then. It's now 64. Mercury Interactive.
Yes, I worked.
Where you and I worked.
Yeah.
115 at that time. Acquired in 2006 by HP at 52.
Wow.
So this is what happens when a run like that crashes. Now, a couple of things to keep in mind, and some of it's mentioned in this article. But first of all, a lot of these .com companies didn't have any earnings. Some of them did. Mercury did, VeriSign did, but some of them, especially the ones that went bankrupt, they didn't have any earnings. They didn't have any profits.
Yeah, they didn't have any there. Yeah, they didn't have any. Yeah,
right.
Exactly.
They just said that we're in the internet, so their stock took off. And that's what's happening now with AI. So all these companies are saying we're in AI. When you and I worked at Splunk, we used to talk about machine learning.
We did.
And we made a point of telling customers machine learning is not AI.
Yep, back in the day. I'm going to guess, since we both left, that they're no longer saying that. I'm going to guess they say AI 1,000 times.
Everyone's saying AI now, but Just because they say AI doesn't really mean that it is AI.
No, it doesn't mean anything changed. No.
Right. There's something in here. FOMO chases on. So I showed some of those charts, but
yeah,
this is interesting. Calling AI particularly generative AI, they are BS generators. They have no verified content in them. Results are totally unreliable. Guys at OpenAI are trying to create the illusion that their actions are inevitable. Yet there is no way to monetize this other than surveillance capitalism, monetizing user data. And we know from social media how much harm that causes. Interest rates are now 5%. It costs, here's an interesting line here that I wasn't aware of. Interest rates are now at 5%. It costs $500 million in parts for NVIDIA's AI chips to do each training session. A training session is where you train the AI on the content. You train it how to look at the content using a variety of different artificial intelligence methods. But you have to train it first in order for it to actually work, right?
Yeah.
It costs $500 million in parts just to train it for each session.
Oh, cow.
That's too high in a 5% interest rate environment when you have a business with no obvious business model. You have to do fact checking on a search engine. That defeats the purpose of a search engine. That isn't progress.
Yeah,
right?
You're going backwards.
Because where AI is today, yes, it's impressive and it draws from all the content in the internet, but it doesn't know if something is true or not.
Yeah. If it's on the internet, Dan, it has to be true. Don't you know?
Right.
It has to be true.
So if you ask ChatGPT to write you something, you've got to go back and fact check it to make sure it actually was accurate.
Yeah.
It can do a great job of creating the grammar and syntax. In fact, it's a boon to overseas scammers.
Yes.
Because a lot of times you can recognize it just by the bad grammar that they put in their emails. Well, they're not going to have bad grammar anymore.
Exactly.
So it will be a boon to scammers. But if you have to do fact checking on a search engine, that defeats the purpose of a search engine.
Yeah.
Right. So FOMO chases on. So let me show you the last one down here that I thought was pretty funny. Follow the technicals. We're still not there. We're still not up there yet. We're actually getting ready to break out. So I think we're going to have some room to run. We've got some time, but just everyone has to just understand this and be careful and use stops. Use stops. In fact, especially in this kind of environment where you've got these huge run-ups like NVIDIA happened last week.
Right.
Move your stop up to, if I bought it at 300 and it's now at 400, I move my stop to 350.
Yeah.
I'm not going to lose money.
And we had a comment on our video last week from a great follower who talked about sell your position to get your money back and let the rest of it run. I thought that was interesting.
Yes, that was a very good one. He was asking why I sold AMD.
Right.
Yeah, and that's a good method. Sell it so your initial
capital's
investment
back.
You've recouped your initial investment and you're just playing with the house money.
I think that was very well said.
That's very well said. It's a great strategy, and in fact, especially in this kind of FOMO run up that we're going to have with AI stocks, it's a great thing to do.
Yeah, I like it.
So this is the one on Cisco. Cisco was the NVIDIA of the internet revolution. Those who bought Cisco in 1999 and forgot to sell have never recovered.
You know what's really funny? I've compared Tesla to Cisco, and boy, do I get hate. Yeah.
I actually would compare NVIDIA more to Cisco.
Well, yeah, I compared Tesla before NVIDIA was around, right? I think NVIDIA is a better name now.
Because the reason, and Cisco is still a viable company today.
Of course. I'm not saying it's bad. It's just
right. Yeah. The reason Cisco ran up so much is because you had to have their gear.
Yeah. You never
to be on the internet, you had to have Cisco's networking gear.
Yeah, exactly.
You had no choice. To be in AI, you have to have NVIDIA.
So I do agree with you that NVIDIA is a better comparison. Yes.
Right. You have to have NVIDIA, but it's very expensive based on where the monetization of AI is today. Now that
But
that
but they
that
let's
will
be clear,
change.
they raised their guidance to $11 billion. They're going to have a blowout couple of quarters because everybody's
Yes,
buying it. But
yes.
that that doesn't mean anything. It's just it's going to be wild to watch.
So when when the FOMO eventually ends, be
Show
careful.
the Cisco chart. Yeah, it will eventually end.
Yeah.
Oh, I've seen that.
So there was some line in here that says, if you play the FOMO play, don't forget to sell.
Yeah, don't forget to sell. Very cool. Well, Dan,
So
thank you very much for all you do. Show your newsletter one more time, and we will look forward to next week when we talk about CPI.
yeah, that's going to be interesting. Breakpointtrading@gmail.com. Just send me an email. I'll add you to the list. And leave a comment if you would like for us to do that live session
Yeah, that'd be
where
good.
we'll talk about technical analysis and we'll talk about risk management, and then we'll open it up to anyone that wants to give me a symbol, and I'll bring the chart up and make any comments on the symbol.
Very cool. We're thinking 2 or 3 hours, but let us know below. Let us know we should be doing that. Dan, have an amazing week, man. Take care of yourself.
All right, same to you. Have a good one.
Yep.